Most people think crypto's next phase will show up on price charts. This week proved something very different. Crypto didn't make the headlines because of price. It moved because financial infrastructure, regulation, macro policy, and real-world settlement systems advanced in ways that will determine where value flows next. In this briefing, we'll break down everything that changed over the past 7 days, and why institutions now set the tempo in 2026. Let's jump in. Story 1. Institutional expansion and ETF action. The first big theme this week came from the traditional finance world. Major financial players continue to file for and build out regulated crypto exposure tools, including new ETF filings and trust bank license applications aimed at stablecoin and digital asset custody. What's key here isn't price. It's that regulated vehicles are being built into the financial system rather than around it. These developments signal that institutional capital isn't waiting for a cycle to flip. It's negotiating how crypto gets priced and integrated. This matters because the tools institutions use to enter the market will shape liquidity, volatility, and where capital actually flows in the coming months. Story 2. Tokenization and settlement infrastructure. Another structural theme this week was the ongoing progress in tokenization and settlement layers. Systems that enable real-time settlement, tokenized treasury assets, and cross-institution interoperability continued to gain traction. Centralized frameworks like national settlement corridors and private trust bank rails moved closer to regulatory clarity. Meanwhile, multiple blockchain settlement protocols reported deeper integrations with legacy financial systems. The result? Crypto rails are no longer experimental. They are being evaluated as legitimate infrastructure components capable of moving value in and out of legacy markets. This shift changes how institutions think about service design, counterparty risk, and operational efficiency. Story 3. Geopolitics and market context. Geopolitical factors remained a major influence this week, with global tensions and macro events putting pressure on liquidity and risk pricing across all asset classes. Markets are no longer isolated. Crypto moves in lockstep with broader financial sentiment, particularly when events in international trade, monetary policy, and geopolitical strategy unfold. For example, when cross-border settlement protocols by major economies were highlighted in the press this week, liquidity flowed not because price rose, but because traders reevaluated where risk and capital would land. Geopolitics is now a contextual layer on crypto, not a backdrop. Story 4. Stablecoins and corporate rail adoption. Stablecoins and enterprise adoption also made headlines, not because of volatility, but because firms are seriously testing crypto as a settlement layer. Corporate treasury pilots, new payment corridor experiments, and stablecoin applications for supply chain finance drew attention from regulators. Financial infrastructure doesn't scale without broad participation from enterprises, and this week's announcements showed crypto being taken seriously by CFOs and risk officers, not just traders. Companies aren't asking, what's the price? They're asking, how can this reduce settlement friction and counterparty risk? That's a fundamental shift. Connecting the dots. What this means. Across ETFs, FX rails, settlement layers, and enterprise adoption, a clear pattern emerges. Crypto is no longer primarily a speculative instrument. It's now being shaped into a suite of financial plumbing tools that banks, enterprises, and sovereign actors plan to use for real economic activity. That's why price noise barely made the week's top headlines. The real movement happened below the surface. Closing. What to watch next? So going into next week, the key variables are liquidity conditions, where flows settle globally. Regulatory interpretations, how stablecoin banks are treated, institutional. On-ramps, ETF and trust vehicle approval momentum. Payment rails adoption, which systems get production usage first. Those are the signals that will tell you where the market actually intends to go, not just what price does next. That's it for this week's briefing. If you want coverage focused on what actually moves crypto beneath the headlines, this series is built for that. See you next week with more crypto coverage.